Every once in a while, a promising financial technology company comes along, and I've been involved in several. I've been involved in some in the crypto space as well. But I serve on the advisory board of just a couple of companies at a time where I think my input has value to the people running the company, and I can just share with them things that I'm seeing and hearing within the wealth management space and just kind of give them my take on how investors are thinking and how advisors are thinking. So I'm very excited and privileged and honored to have been asked to join the advisory board at Osprey, and I've said yes. And I'm putting up some of my own capital in two ways. Number one, to buy into shares of Osprey, to be a shareholder of the business, but I'll also be putting in some personal money to the trust itself. So the way I'm planning to do that. I don't know if this is smart or stupid, but I'll be dollar cost averaging rather than trying to pick and I own some Bitcoin already for years, but like this is my new way that I want to do it because I want to do it in an IRA. Like I want to be able to do this in a brokerage account, So this will be my new method of getting exposure to crypto.
Hey man, we're thrilled to have you and excited about the future. And I think dollar cost averaging makes a ton of sense. We've actually been speaking to investors and family offices and things that do exactly that. They kind of roll a weekly program or a monthly program or whatever, just because there is a lot of volatility. And we all know the math on dollar cost averaging, and you buy low and average down.
I talk to people all over the place. Like I go get a protein shake down the street. The guy wants to know, what do you think of Tesla? I go get my hair cut. They want to know, should I hold my Apple? Everyone thinks that I have financial advice for them. Like that's appropriate for them. I've never met you before, but here's what you should do with your Apple. All right. So I get the Bitcoin question everywhere I go. And I'm like, what? Don't ask me. I'm an idiot. I should have millions and millions of Bitcoin if I knew anything, because I remember when it was $50 and I was sending mean tweets about it. So don't take my advice on the price of Bitcoin. I had 10 years to become a Bitcoin billionaire. I didn't do it.
Right.
That being said, I think the dollar cost averaging version of how to get exposure makes sense for me because I have no opinion on where the price might go. If you told me Bitcoin's at 75,000 in a month or 25,000 in a month, I could be convinced of either case.
Yeah.
Like absolutely, you could convince me of either one. So that's why for me, DCA and what the risk is, well, the risk is it goes to zero, but like to me, the more realistic risk is it goes much higher and I just barely own enough. And then that's okay because I don't want that other risk where I put all the money that I'm going to allocate to it in today and it gets cut in half. I don't want that. That risk would bother me more. I'd be more okay with leaving money on the table than just plunging in and getting cut in half. So that's the way I'm thinking about doing it. That may not be right for everybody.
Yeah, I agree with that.
Is that how you think most people will use your trust? Or you think there are a lot of people waiting for something like this that will just say, day one, I want 5% of my assets in it, and this is how I'm doing it?
No, I mean, I don't think that. I would say that even if it's just like a mini dollar cost averaging, I think most people will kind of leg into it a little bit. And we've already seen that. We've had investors that come in and they, kind of get to know the product, the firm, put in some amount, and then come back and put in more, right? But not necessarily on a systematic basis, for weeks at a time or months at a time. So I think also just how, you're saying that the guys cutting your hair want to know, everybody's at a different spot with Bitcoin, right? Some people.
What do you mean? What do you mean by different spot?
Well, on the learning curve, we have some people that are saying to us, hey, we've been investing in Grayscale's product for years. We're really excited about this. And we understand how the whole ecosystem works. Other people are still just learning about it for the first time and trying to understand the space, right? So I think those are two different ways to approach it. And it's going to be different for everyone. And not only that, there's really two ways to get access, right? One is the accredited investors that come to the company directly and subscribe units. Those have to be held for a 1-year holding period. That's kind of the US regulation for private placements. And then there's a secondary market under the ticker OBTC where people can just buy and sell it like a stock or a closed-end product. So
Right.
it's kind of two marketplaces, if you will.
Did you get a chance to hear what Hester Pierce had to say? So Hester Pierce is the U.S. Securities and Exchange Commissioner, and she gave a talk for CoinDesk TV, or I guess she was in a fireside chat, and she basically said the world is ready, or America is ready for a crypto exchange traded product. So you are already going to be an exchange traded product, but it sounds like the hearts and minds within the SEC are going to be nudged closer and closer to a true ETF. And you and I have talked about that offline, but that's probably the question you get more than any other question when you tell people about the trust. So what would you say about the likelihood of an exchange traded fund for Bitcoin in our lifetime?
In our lifetime, I think it's a relative certainty within our lifetime, statistically speaking. But especially so, Hester Pierce put out something recently. She frankly has been bullish on a Bitcoin ETF. She's been very publicly for that for a couple of years, honestly. But she was an outlier in the commission, and that wasn't enough to get it done. Now you have a new administration coming in, and the questions that I've been getting are more about that. Is that a sea change? Are things going to unlock there?
Gary Gensler comes in from the commodity side too.
Yeah,
which in itself is interesting.
Right, and apparently he taught a class at MIT that had to do with Bitcoin and crypto and so forth. So I think he understands the technology more than Jay Clayton. But that doesn't necessarily mean he's just going to walk in and flip the switch. I think that the SEC has proven that they're being very careful and thoughtful about this, and he's a very analytical guy. I'm sure he's going to want to make sure he's making the right decision before he makes a decision like that. I don't really have a view about a timeline. I built this business and set it up a few years back because I felt like the timeline was still pretty far away. It looks like that was the correct view. I still think it could be a while. The SEC is very cognizant the U.S. is the biggest market in the world. A Bitcoin ETF would be basically a huge deal. And I think they want to be pretty cautious about it. But we're watching that very closely, and frankly, we would be involved immediately if we sense that things are changing in that direction.
That's why I'm betting on you guys. I feel like there's probably been 100 applications for people to have a Bitcoin ETF. Everybody wants it, but show us what else you've built. Oh, we don't have anything. We have a white paper. Oh, that's good.
Right.
So, but you guys did it. You guys built it, and you have built and launched, I don't know, dozens, hundreds of exchange traded products in your career. You've been doing this for a long time. Okay, so I think that's important. I was at all the CoinDesk events in New York, at the Marriott Marquis. Thousands of people in 2017. Dozens of people in 2019, by the way.
Right.
Dozens. Literally dozens.
Right. Dozens.
I swear. I could hit the back of the room with the sound of my voice, no problem. But I moderated. What did I do there? I moderated a panel. I emceed one year. So I've met lots of people working on public-facing crypto products, investment products, but most of them have never done anything on traditional Wall Street at investment banks. Right. They've not launched products before. It doesn't mean they're not capable, but you definitely have an edge when you've built things before and investors have benefited from those things. I feel like track record still matters, even though crypto is still new. I still feel that way when it comes to releasing a customer-facing product. It still matters whether or not you've done it before and you've lived through it and you've been in that position.